See, I think that can be a great start for this podcast because my previous visit to Tokyo, there were two ramen joints that had a Michelin star. And I was always curious about what's the best ramen or what's the difference. Your wife originally is from Sapporo, so that's north. You're based in Tokyo. Are there fights like, oh no, this is the best ramen, or this style is the best ramen, or what do you
The
think?
Japanese love food, and I think we're privileged to have the best food in the world here in Japan, period. So, for example, we went to France last year for a short vacation.
Mm-hmm.
Actually, we didn't go really to many French restaurants in Paris because we have quite a number of Michelin star French restaurants here in Tokyo, and more probably than you can, at least I can visit in my lifetime. But it was more for the ethnic variety, right? So get some
Mm-hmm.
North African food, to get some like Middle Eastern food, and so on. That's maybe harder to get here in Japan. But the quality of the food overall and the service level as well that comes with it is simply amazing. And so there are also television shows about food all the time, right? You switch on the TV and somebody is slurping ramen or eating an onigiri, and there are the rankings and competition for that. But it's in a humorous way, a light competition, but clearly people have their preferences and their aggregate rankings of the best 20 ramen shops in Japan. But if you also go down that list, you need to wait like an hour and a half or two to get into these top ranked ramen shops. I like the local joints where you kind of in your neighborhood, where you go a bit more often, you build a relationship maybe with the owner, and it becomes cozy in that way from the personal relationship perspective.
Let's say it this way. Oh my God. Only for that, I have a few notes. First of all, with all due respect to the French, and there is a lot of respect to the French cuisine, the best French restaurants that I had to explore, they were or in the country, or in London, or by Japanese cooks. Sorry, chefs. Uh, I don't know. It's the meticulous attention that they have to details, quality of material, and that inherent culture of it needs to be perfect and the best. I don't know. It's just amazing. And in the ramen place, well, I was standing in line for more than an hour to one of those ramen shops, and I was like, yeah, I don't really have the patience for that. So at the end of the day, I went to one of the local places that you put in the notes, and there is a machine on the side, then you print, and then you go to the chef, and then they're like, okay, now we can do it. Sadly, it was only in Japanese, so I have no idea until today what I actually ordered, but it was delicious.
It's a good time for you to come in March because the yen is pretty weak. And so if you have US dollar earnings, traveling to Japan is a real bargain at the moment. So you get your ramen probably for, say, $7 to $9 or so.
And it's going to be amazing, especially with the cold beer. But I love the fact that you brought the yen, because that's a perfect segue to talk about the Japanese. Let's start with the macroeconomics. So the yen is at the lowest that I remember, which means now it's about $1 to 150 yen. Last time I was in Japan, it was 1 to 100 or 1 to 110, but the calculation was like 1 to 100, and it will be fine. And then at the same time, the Nikkei is like at the highest. It's after many years of dashing and just being kind of stagnant. What's going on? What are the changes? Give us like the high level of, the Japanese economy, and later on we can understand better where their position against other players in Asia.
Yeah, I mean, if you look at the currency itself, I think there is a short-term and a long-term trend in there. And the short-term trend clearly is determined by the interest rate differential, Japan against the rest of the world, primarily the US. And that, even if you followed it over the last month, has really driven this bouncing around between 140 and 150, because at the end of December, say, many people expected or it was priced into the market that the Bank of Japan would give up their negative interest rate policy earlier, and that also the US would start lowering the rates. And then we kind of moved to almost 140 range. We didn't breach it. I think the rationale during January has changed a little bit. We had a monetary policy meeting of the Bank of Japan that, as predicted, especially after the earthquake on the 1st of January, didn't do anything. So it's a question of when they're actually going to take action, or maybe also before they take action, maybe signaling in the March monetary policy meeting. And at the same time, all the numbers that came out of the US, especially also last Friday again, are pointing to fantastic GDP growth, a very strong economy, right? So this interest rate gap is kind of back to higher expectations, and we've moved close to 149 yesterday. And so I think it's a safe bet, and it's one explanation also, I think, for the move into Japanese equities. You would expect with some certainty that over the next year or two, this interest rate differential becomes smaller by very little action on the Japanese side, but basically going from negative 0.1% to 0%, maybe to 0.1 if you take a 2-year time frame, but also for the US rates to come down a bit. And so if you look at different forecasts over 12 months, I think we're talking between 135 and 140 to the US dollar. And so if you put your money into the Japanese market at 150, you have an expectation of making 10% currency gains over that period, no matter what the market does, which is, I think, pretty attractive. The Nikkei itself is driven by also a couple of factors. The most interesting one that I read over the last year and makes us a bit laugh and smile, but is like, we have, after the global financial crisis, had now 14-year bull run or so, right? And at some point, you're running out of ideas. So the best explanation for Japan is like, well, where else do we put our money, right? Where's the story to tell? And we've run out of ideas, so Japan it is now. That's a bit fictitious, but maybe some truth to it. Underlying that, you have problems in China. And so all the money that's coming out of China needs to go somewhere, and people want to keep it in Asian exposure. There aren't many big markets here that could absorb even, right, a portion of that capital. The Japanese endemic story is that the Tokyo Stock Exchange has taken action to make companies more accountable for the use of capital and for the share price. And they've started doing that almost a year ago in March, where they pushed across the segments. And at the beginning of January, they published the first of what will be now a monthly report on those companies that have submitted action plans, and then also put out examples of, let's say, good examples which have names attached to them, and bad examples that have just been quoted without the attribution. But if you focus on a specific industry, you can download that spreadsheet and you can see who in that industry has published their improvement plan and who hasn't. And right, if you're an institutional investor, you can ask a question, or you're encouraged even to ask the question of the management team why they haven't responded. And with the fiscal year that ends in March, right, the annual general meetings will take place in May and June for the most part. There might just be some fear of in the boards that haven't responded yet that they might get asked that question during the AGM season. And so maybe more action will come. And that is focused, or was initially focused, on companies that have a price book ratio below 1. But the TSE has made clear that they expect plans and responses from those companies that have a PBR greater than 1. I think it's noteworthy, and I'm probably looking more at the banks regularly than the insurance companies, but clearly, after 10 years of zero rate, negative rate interest policy, the banks generally, before the rally started, they were at 0.5, 0.6 price to book ratio. Now, after the rally and kind of the expectation baked in of rising interest rates, might have moved to 0.7, 0.8 to the major banks. But clearly, the financials have had a bigger impact on suffering from low interest rates because the interest margins were low, etc. So these are some macro trends on the financial side, right? And then you have the general, I think, demographic trends of lower population, shrinking population, also especially in regional areas, right? And with that scarcity of workforce, and maybe it's also an internal force to drive digitization forward. So these are certainly trends that I think are relevant for any startup, any industry to take advantage of.
Before we jump into that, because there are many things that also coming with the culture. For example, one of the things is that very cash heavy, unless you're using the Pismo that you're actually using from 7-Eleven, and that's kind of your bank. And there are many other transactions that here in the US are still, people raise their eyebrows, while in Europe it completely makes sense, and in Japan it's like, of course, given. I don't think that I introduced you in the right way, or actually at all. So if you don't mind, Norbert, give us a little bit of background, because I've been following you for a few years now on LinkedIn and your different posts, especially within the fintech world. I know that you had your little bit of experience in insurance, and that's one of the main things that I'm all curious about. But if you don't mind, give us a little bit of background about who you are and what you are doing within fintech and finance.
Yeah, so I've been by trade, I would describe myself as capital markets, institutional capital markets technologist. And so I've worked in investment banks, building front to back trading infrastructures and driving change programs, driving new products together with my team, longest time at Goldman and at Barclays, and then also as a consultant a bit. And the beginning of my career, and let's say at the end of my corporate career, I actually was in insurance. So when we came back to Japan in 2017, joined AIG in Japan in the strategy role, which was nice to really go back and understanding the market and the drivers. But then it's a cultural thing. If you spend your career in capital markets, which is very, let's say, short-term and very short-term results driven, insurance has a bit of a longer tail, and I think that determines quite a bit of the culture. So it wasn't really a great fit anymore, and I've been now old enough to go my own way. And so I think I'm done with my corporate life, and I'm running a portfolio of things. One of the reasons we're sitting here is that I started Tokyo FinTech Meetup in 2017, which, like many meetups, has obviously taken a hit during the pandemic, but it's grown in time to 3,500 members or so. I started also writing a weekly newsletter on LinkedIn about what's happening in Japanese finance and fintech. So it's not only fintech, it's not only insurtech, it also covers kind of the broader finance aspects, like we started our conversation. And that has more than 8,500 subscribers. So if you like to hear more about what's going on in Japan, go to my LinkedIn profile. You find the newsletter there. Please subscribe. That'd be fantastic. And I do quite a few of angel investments and consulting advisory mandates for different companies, generally, say broadly in the fintech space.
So before, I hate using the before and after and all that. I'll just jump into it. Okay, continuing with something that we touched a little bit earlier, which is Tokyo, Hong Kong, Singapore. Those are always kind of competing cities. And I have the conversation with a few people, if they are coming, of course, from the US, Israel, Europe, and other locations. Okay, I want to reach the Asian market. And my first, follow-up question would be, which part of the Asian market? And then that will help kind of solving a better direction to which entry point. What is the difference between these amazing cities and how they compete with each other? What's the benefits that they provide to the different companies or startups that are trying, to establish their first step, their first foot into the Asian market?
I think the major differentiation is really market size, right? And so if you go by the potential just by these three cities, and maybe we can include Seoul in that to some extent as well.
Yes, yeah.
Japan is just a huge market. And if you're talking insurance, it's the second largest market in the world after the US. It's bigger than the Chinese insurance market at this point. And it is a more difficult market to enter because it's compared to Singapore and Hong Kong, right? It's not English language driven, although there's some forces that are trying to change that. And it's also not as digitized, certainly, as Singapore is. So if I want to set up an entity in Singapore, I can do this through a service provider completely online together with a bank account and basically be operational in one afternoon, right? That means from ideation to having an entity and being able to start doing business, that is really a very short time. And that, I think, is also possible in Hong Kong. And it's certainly not possible yet in Japan. And so when you look at Asia, you need to make a decision. Do I want to have an easy start? And that's, for example, you can do Singapore, and you can also then from Singapore really how they position themselves to cover the Southeast Asian markets, which has huge potential, right? With Indonesia, 250 million people or so, in Thailand and Malaysia, etc., all within easy reach. Or do I want to? And Singapore is 5.5 million people, something like that, right? Japan is 126 million people, and so it's a totally different market. And I think the argument is always many people go the easy route. I say we set up in Singapore, right, because it's easy to live. It's maybe easier to acclimatize to Asia, and then we'll try to do Japan from Singapore. And that typically doesn't really work well. I think you can probably do Singapore from Japan, but you can't do Japan from Singapore. You really need to have a presence in Tokyo to be credible, and you need to have an entity here to do business for the most part, right? There's always exceptions, and I think there are exceptions also in InsurTech where people had business with the local insurer before they actually had an entity here. But if you look at general guidelines. And there's nowadays good support also from the Japanese government if you have a established foreign business to come here, right, and establish entity, get office, get licensing support, whatever is required. Hong Kong, I think, is a simply special situation because I think in a certain way it's a capital access play, maybe market access play that has just become much more difficult with the security laws, etc. I actually went to the Hong Kong FinTech Festival, FinTech Week last year because I hadn't been in Hong Kong for quite a while and I wanted to see with my own eyes what it is. And I think it's still vibrant. I think some of the folks who maybe moved from Hong Kong to Singapore get a bit bored in Singapore, and some came back. But there's still a bit caution, I think, around the overall environment and kind of what it means to use Hong Kong as a entry point. Also, if you take the kind of the Greater Bay Area as an entry point into China, right? I think China business has been much harder than doing business in Singapore or Japan. So I think many founders I talk to maybe hesitate, but there is a lot of flow of capital coming through Hong Kong. So if you're fundraising, etc., it's certainly a market you can't ignore. And I think because I threw Seoul in, I should comment on that as well. Seoul is a bit like Tokyo in terms of the difficulty of the language. Many of the programs, even for foreign startups in Korea, quite like Korean language applications, etc. And that's changing there too, in the same way it's changing in Japan. I think they are maybe even more aggressive than Japan in pushing their own startups. And they went to CES with 500 startups from Korea across all industries. So they had a whole pavilion, while Japan, and they beat, right? It was the highest presence of any nation, while Japan went with about 30. And so they're clearly investing a lot, and they're doing it on a grand scale. So I think similar demographic issues in terms of birth rate and aging population, etc.
Oh,
But
that's a
population
great
that's
point.
one-third.
Thank you for that, because now I need to write two mental notes. One, I need to talk to the folks in Samsung Ventures to get them to hear more about the work in Korea and Seoul. And then there was an afterthought. It's like, we just missed a small Asian country, which is a subcontinent of India, which has 1.5 billion people. And come to think about it, I had a few founders from India, but I've never spoken to an investor who can give a little bit of more overview of what's going on in India. But that will be for a later episode. Always happy. The last person was Leo from what's his or is it Leo Ventures?
Shwetang from Leo Capital.
Which one?
Shwetang from Leo Capital.
Yes. So, and he's based in Singapore. So it's been a while since I met him, and the last time I met him was actually in London. But let's put the things for after we finish the episode, and let's go back to Japan. Japan is huge. They have their all amazing benefits and everything. Is there something else besides Tokyo, or Tokyo is like the beating heart of technology, innovation, and startups, or business? Is that the New York? Is that?
There's certainly much more, and I'm probably a bit more cynical on some of the efforts, simply because my market experience goes back to 97. And when I came to Japan the first time, that was when we had Big Bang deregulation of the financial services sector, right? And the story at that time was, right, of course, we had the stock market bubble bursting in 89. And as you said, the Nikkei is now the highest again since that bubble high. So it's the highest in 34 years or so. But also the deregulation happened under the theme of global financial city Tokyo, right? To make it more international, to bring it up to the level of London and New York. And if you look at much of the finance, fintech, asset management, marketing that's coming out right now, it's still the same slogans, right? It's Global Financial City Tokyo. And so I think there's been lots of talk in 25 years, but maybe not sufficient action. And some of the problems to make it really international are truly hard to solve. There's no doubt about that. And at the end of that conversation is always taxes. So when you hit on taxes, this whole thing kind of stops. But I think global financial city Tokyo is still credible, of course, right? I mean, the domestic market is huge. The domestic financial market is huge. The mega insurers, mega banks are global companies. But then there's lots of domestic firepower and savings. You said, like, people still pay in cash, but they also, because we had zero interest rates, had to keep lots of cash of the investments. So 50% of the household assets is in cash holdings, and that might not even be in a bank account. It might be under the mattress or inside a closet, as the Japanese would say. So it's tansu money. It's not under the bed here. But if you go beyond Tokyo, it's saying Osaka does the same, right? They haven't even come up with a different slogan. So it's like Osaka, Global Financial City Osaka, or Global Financial City Fukuoka. It's just not credible for me, right? I mean, let's put it out there. If you look at fintech or finance rankings, even some of the startup rankings have, like, Fukuoka pretty low. If you look at Startup Link or so, maybe 200s globally. And so I think there's lots of interesting things that are happening in the startup ecosystem, in the university ecosystems, in terms of deep tech research and so on, that traditionally plays a bit more to Japan's strength, which you would describe as more hardware and embedded systems rather than software by its own. Bioengineering, right, quantum computing, all these things, and their universities, and you can build clusters around the universities and so on. I think that has much more merit when you look at Osaka, Kyoto, Fukuoka, right, Sapporo, to kind of carve out these things, and clean energy, ESG standards, sustainable development, and so on, rather than these global financial city story, I think. But realistically, when we talk about finance, it is Tokyo, and you cover, right, most of the firepower that is available. And of course, depending on whether we talk, right, do we talk about, especially in InsurTech, it's a much tighter differentiation between, let's say, licensed businesses where, well, I'm a software platform for insurance. Then, right, you can have your developers anywhere, and if your developers are fine in Fukuoka, let your developers work in Fukuoka, right? I mean, for that matter, I think because we have a scarcity of software engineering talents, the smart and truly global Japanese startups source their team globally, and, right, they might well plug into Vietnamese or Indian tech talent. It's the same that they dip into Singaporean or Hong Kong market development talent.
Out from the top of your head, how many VCs are there in Japan?
I would put the number at around 250, and there's a good list circulating that two smart, ambitious young VCs have put together and maintained. And there's always lots of debate around that list because it is not necessary. And the point being raised is that the fact that they're on that list doesn't mean that they invest outside Japan or into non-Japanese founders, right? So other people have taken that list again and filtered it, let's say, for the foreign population on evidence of actually investments made into foreign founders in Japan. So that's also very useful. And then I think relatively, some people create lists that are obviously serving their own purpose, but another VCs puts out an annual list that has the lead investors' deals into Japanese startups that are new. So it's not, they're not counting a follow-on investment in that list. And so I think that the top VCs there, it's only 3 that have done 10 or more deals last year, right? So
Mhm.
we're not talking like huge numbers, but I think there is a good ecosystem developing. Clearly also with the China story taking a hit, not only on the stock market, but also financing wise, some of that money is turning to Japan for sure as well. And so we'll see.
Yeah,
Everybody is here. You're coming for plug and play. Techstars is now just coming to Japan. They have a launch next week.
no
I think
kidding.
it's
Only
exciting
now.
times. Yep.
Wow. The
I think
reason
the
I'm
most
asking
active.
is to understand better the ecosystem, and I'm not really sure about the sequence of the chapters that we're going to release. So, but a previous episode was with Chang Li from Plug and Play, the one in Shibuya. And also, I asked her a similar question to understand better the ecosystem. And part of it, as always, we are trying to understand the driving forces, right? So, how many VCs are the CVCs and the university fronting funds? Are they pushing it? So far, we are talking about. Sorry to say, and I apologize for the folks 8 hours away from me in Silicon Valley. This is pure tech, deep tech, and something that you invest in a very long time, a lot of resources, and you build new innovative technology, right? Unlike a few things here that can be super brilliant, but most of the deals that we see here in the US, mainly in the West Coast, are in LA, all kinds of entertainment and consumer retail oriented, and a lot of, oh, it's cool, it's not cool, right? Um, and then there is a question, okay, who is leading the ecosystem and what are the different powers? And of course, the follow-up question will be about the LPs, who is sponsoring. So in case of CVCs, most likely it's a one LP, maybe there are a few others. And are they focusing on Japanese startups? Are they investing also outside? Do you see US VCs investing in the Japanese ecosystem? I'm sorry, I threw so much information, but please pick a few of them and try to give us a clearer view of what's going on in the fintech and insurtech venture ecosystem.
Yeah. So I think, so if you look at Plug and Play, I think they've been integral to shaping the ecosystem. So Chang's predecessor, Yuki Kishi, who's now has exited and joined the startup in the like sustainable development space, right? He was instrumental on the fintech side in getting plug and play started. And some of the war stories there are really interesting from the early days, where kind of just these meetings of corporates and startups, right? People were not used to. It's like these, say, American style networking events where everybody goes in, right? You say hi to everybody and so on. That's not the Japanese style. You need an introduction. And so you need to give them lots of credit for breaking down these barriers and getting a generation really of corporate innovators, or people who own these innovation or startup relationship functions, to understand how to interact, right, on both sides. And I think we have all lots to thank them on that. I think 500 Global was here pretty early too. Japan is one of the biggest investment markets, and they've been also, to your earlier point, engaged regionally. So they've actually intentionally focused on, like, IG, for example, and ran programs there, which you would put a bit under regional revitalization as well. So I think great work done and great investments done, right? I think they were, I think 500 Global was an early investor into Paydi that got bought by PayPal in 22 for about $2.8 billion, largest exit here in Japan. So I think these incubators, accelerators really ignited the ecosystem. Now, the Japanese government has put out a 5-year startup plan, and that came out, let's say, also late 22, I think. And with that sets a framework and got everybody going. And now you get like accelerators, incubators. There's new ones coming up. I can't keep track of it anymore. But that's good, right?
That's good. It's a good signal. That's a very good signal.
What do the basketball players say? Like, you miss 100% of the shots that you don't take. So if you want to win, you need to take shots. And there have been way too few shots taken here, let's say, over the last 20 years. And so if it tilts a bit onto the other side and there's more shots, maybe there's more capital in to some extent than there are like viable startups to invest in. That's okay, right, for a while. I think kind of it's hard to balance out every step of the way, but clearly the ecosystem is evolving. People are excited about it. Young people are excited about startups. Not everybody, but more and more, right? Don't necessarily want the traditional corporate career for life. Actually, they're going into the startups and want to have conversations and so on. So I went to a few conferences here last year in Japan, and well, I mean, you still stick out a bit as a foreigner, but I had a few conversations where I got approached by university students who were like part of a startup club in their respective university, and the whole startup club went like to this blockchain conference or startup conference, right? Whatever it was at the time. And okay, it's a 30-person startup club in a university where kind of the whole class, right, might be 1,000 people or more, but it's 30 people who probably won't choose the corporate career. And I think these are all like really good green sprouts to see. So I think you had the early people like the Plug and Play, the 500 Global, you have the government program, and you have, right, certain corporates who have been also early with their CVCs. I think on the banking side, MUFG has done a formidable job. On the insurance side, also, I think Tokyo Marine on the one side, but then MSAD Ventures, who know a bit better. So I had Tiffany Wang on my podcast once, which was very educational. And so MSAD basically has taken the more unusual step maybe on the surface to hire and seed a team in Silicon Valley, right? So MSAD Ventures is run out of the US West Coast, and it's not an investment team that runs out of Tokyo. So they have their own challenges maybe in also connecting the investment thesis in terms of with the group activity, but they're also making really early stage investments. I think they're probably making, at least as far as Japanese CVCs are concerned in that space, they're making the earliest stage investment compared to the rest. So it's very interesting to follow what they're looking at and where they're investing as a future trend. So yeah, I think it's really, I think maybe we're stirring a soup now with all these different ingredients, and it might still take quite a little bit until it's digestible, but it's clearly cooking, and you'll see this when you're here in March again. I think the atmosphere is much different than pre-pandemic, and all this excitement needs to translate into something tangible, of course.
Yep.
But just seeing the action is very rewarding, hopefully, for many people.
So luckily for me, Tiffany from MSAD Ventures was on my podcast as well, and John is going to be one of the panelists on the panel that I'm moderating at ITC InsurTech Connect Japan. That will be March 12 in Tokyo. And the topic of my panel is about how to build and cultivate a unicorn within the InsurTech, or in this case, we can talk about FinTech as well, ecosystem. And so far, my feeling, in order to have the ecosystem, right, and we are talking about a very big market opportunity. So you need to understand the trends, the forces, the drivers of everything. Then, of course, do you have the right entrepreneurs, the right team? Do you have the right opportunity and, most important, timing? And then there is a question of capital. So we talked about the VCs, the CVCs that are kind of very limited compared to the US. And then it's a question of, are those VCs invest only in Japanese? Do they invest outside? Because Tiffany and John and a few others, they are based in the Bay Area, and they're working closely with the Tokyo-based team and are investing globally, right? And then you have US or other global foreigner VCs that may invest, maybe more. Nowadays we see more money coming from China or via Singapore or via Hong Kong, which, well, Hong Kong is China. Sorry guys, but it is. And then there is a question of, do we see pure Japanese VCs investing outside? Then there will be the question of the LPs that invest in those VCs. But one of the ingredients that is very crucial for all of this are the entrepreneurs themselves. So it's great that we start to see the clubs in the universities, but culture-wise, is that there? US, hardcore capitalism, there is the concept of building your business, entrepreneurial. You have Silicon Valley HBO. You have the stories already about the successful and the failing entrepreneur that, fail, jump back up. Taking that into the unicorn, what needs to be, unclogged or supported to build a unicorn, a Japanese unicorn that we will hear about in the US?
I'm going to answer that industry independent to start with.
Please,
and I
yes.
think the uniqueness of Japan so far has been that unicorn counts have been low, but you can go through a math and come up with an adjusted number of unicorns simply because there's been a scarcity of growth capital. So I think on the pre-seed seed side, you've been pretty much okay. So you can get a company started, but there hasn't been the ecosystem to scale up necessarily. And that means that what might have been elsewhere a Series A or Series B in Japan is an IPO on what used to be the mother's market or is now the TSE growth segment. And you have companies going public much, much earlier than certainly in the US, but also then Europe, right? I mean, in the US, it has become extreme that almost companies don't go public anymore. And you already like
Yeah, it's too
Decacorn.
expensive.
Yeah. And
Yeah.
it's totally expensive. Yes, as well. But I mean, like we were chatting earlier a bit about WeWork. I mean, when it went public was like a 40 billion plus company. And here you've got companies that go public, right, on whatever.
So actually
Like
today,
we all,
funny enough that you bring that up, because today there was, so we can date it when we are recording. What is it? For me, it's March 6th. Sorry, for me, it's February 6th. Today there was in the Wall Street Journal that Adam Newman is trying to buy back WeWorks. And I wonder how that's going to slide. But, he's a very charismatic individual. Yeah, sorry, I interrupted you. Please continue.
No, it's fine. I thought it also before we went on here. Also from Japan perspective, SoftBank has taken over the Japan operations, which I think are running pretty well, and is a successful business here. I'm a WeWork member myself, and I think they have good service, but there are other players in the market as well. But for all the incubators and so on, there's a real estate component to the play here in Japan, because if you partner with a real estate developer, right, who uses you to attract, let's say, flow into the buildings, etc. I think that's how most of these accelerators and incubators are being set up. So it's like Mitsubishi Fudosan and all the like. But yeah, so I think startups just go public much earlier, and again, there are folks who've done the analysis, right? So if you take the classic definition of a unicommerce private company and extend it in the Japanese context to those that have gone public and maybe then within 3 years or so of going public reached the valuation of $1 billion US. If you include them in the count, then the Japanese count actually doesn't look that bad. And I think that's probably something where you see some change with the venture capital ecosystem growing, maybe other funds, asset managers coming here, looking more aggressively at this market. Also, again, with an exit from China, for example. I think, right, you become a bit bipolar. If you take China out of the equation, I think you become a bit bipolar as far as Asia is concerned, because you mentioned the 1.4 billion Indian market, which of course on the top is maybe 200, 300 million of like directly accessible based on wealth, right? But you have a market that's maybe looks like China 25 years ago and is accelerating fast, has a youth that's still coming and entering the middle class and generating spending power. So you clearly see the projection of where it could go in 5 or 10 years. And on the flip side, you've got Japan, which is like a very mature market, right? It's a very strong economy now, but is aging fast. And so if you're a venture capitalist, you need to kind of balance where you want to play. And so I think you see, lots of Japanese companies developing Southeast Asia as a large region, right? As the slogan is there, the secondary home market, basically. And quite honestly, I thought they should have done this much earlier. There is kind of some pride for those entrepreneurs that are an earlier generation to be successful in the US market.
Mm-hmm.
But the way the US has developed over the last 10 years, right, it's become, maybe sometimes politically difficult as well.
Oh yeah,
And you've
yeah.
got this growth market in front of your door. And I think that has changed over the last 5 years, maybe, where really, if you look at any large Japanese company in any industry, clearly they're looking lots at India, and they're looking at the whole ASEAN space and so on. I think there's lots going on.
Yeah. Wonderful. Let's do a little bit touch about the LPs, and then we'll move to the last question. What is the LP scene there? Is it only big companies that invest in their CVCs? Is that money that coming from the outside? What's the common profile of an LP?
I think it's very corporate driven, to be honest. I think what you're missing in at this stage, right? We mentioned payday as major exit. What you're still missing is the recycling of capital, which, right, worked so well in Silicon Valley. But because you had, let's say, companies going public earlier, these multi-billion-dollar exits have been few and far between, and hence those ex-founders who now become funders
Mm-hmm.
really don't exist to the extent that they might be in other places. And I think if you look at the wealth management side of like wealthy Japanese have long invested through Singapore, right, for a number of reasons. I think clearly historically also to keep the money away from the Japanese tax office, but all that of course changes at a global level. But so I think you see probably quite a bit of Japanese money mixed into this pool that's slushing around in Singapore and doing investments in that space. That would be my take. I think, but I'm looking a bit at angel syndicates and so on, and evaluating what it would take to create one here. I think there's enough people who are
Mm-hmm.
interested in that. And it's a question whether, even if you create it here with investors here, whether you actually legally would situate it here, or right, the SPVs is still created outside. So there's a few consideration in terms of money flow, taxation, governance, and so on, that I need to clear in my own mind. But I think the preferred approach probably most likely, especially if it's not only Japan focused but more Asia focused investments, you probably you can have a governance structure that includes Japan, but the funds probably domiciled somewhere else, or the SPVs.
Yeah. Ooh, that can open a completely different conversation, especially that I'm an investment banker, so I'm not going to respond on that in any way, especially not on record. And yeah, Reg S is the best solution here. In a sense, this is not any way or any recommendation, blah, 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 disclaimer. Everything is for entertainment. Okay, let's let me ask you the last question that I'm asking everyone. Can you please give us a recommendation, something that you'll give the younger you at the beginning of your career, or anyone who is entering the fintech, or it can be one of the last books that you read? I know that you're a passionate reader.
I mean, I think, I'd say I'm probably I haven't been very strategic around my career, and I've been much more opportunistic, and in that regard, lucky. I think where I landed, and it all worked out well, with the help of many people who try to coach me. I'm not sure I'm coachable, but they try to coach me throughout the career. And I've been, I think, more focused on when somebody comes up with an opportunity. It's not like you need to take every opportunity, but I've been taking a few risks. Right, you've moved outside of your home country as well. I think I did this in '97 without mobile phones and without strong internet and so on. There was a time where you still paid whatever $3 for a minute of an international call. Was a bit of a different time, but still, right, much easier than people who done it in the 1950s. So I think in today's world, it still feels, although we're separating out into geopolitical regions and globalization is being rolled back a little, I think that international experience is vital. And so taking some risk of, right, packing your suitcase and going somewhere else is easier than ever, right? It was easier for us than it was in the 1950s, and for today's generations. And you see it in the news, all these digital nomad visas. You get it in Portugal, you've got it in Korea, you get it in Japan, it's coming, etc. So in a world where you can work anywhere, please do work anywhere, right? I mean, especially before you have huge obligations or so. I think experiencing a different culture, different way of doing business just creates an understanding that will benefit you throughout your life and unlock some creative juices that will also be good. So I think that's on the career perspective. If you want to dive back into insurance, one of the last books that I read was Plunder, which is the private equity story in America. And one of the chapters in that book is actually how private equity is undermining insurance and capturing that industry, right, in order to kind of recycle capital and use then the capital in life insurance to reinvest in private equity funds. And that book came out in May 23, so found it a fascinating read. And I of course, I'm familiar with private equity. I didn't know how far it has gone in certain industries and why and what the economics are. So I think it does a really good job of telling that story. And that was amplified in December when the IMF put out a global stability note on private equity and life insurers, right? And I said, okay, that reminds me of that book again. And so we've seen a few deals here in Asia, and of course you have the largest life insurers in Japan. So we've seen some purchases of books here in Japan, and we'll see when the FSA wakes up to that and maybe takes a position as well when such deals become too big to be comfortable.
Wonderful. Norbert, thank you very, very much for joining me today. It was a pleasure chatting with you.
Thank you very much for having me. It's unusual for me to be on the other side of the microphone, but I enjoyed this very much, and I hope to see you then in March when you're here.